Hey guys, welcome back to a brand new video. I'm RexFinance, and today I'm going to be talking about a stock that I quite honestly think will never recover again back to all-time highs. You know, this is a very bold prediction to make at the bottom of the market, but that's kind of the beauty of predictions, is you can be wrong about them. And that means I could also be very wrong about this prediction and my thesis that I'm laying out in this video. But that is my promise to you, that this is my personal thought process, my personal prediction, my personal thesis about this stock and this company. I'm not asking anybody to agree with me. It's up to you guys to take my own thoughts and come up with your own conclusions. Now, that being said, I am going to do my best to stick to the facts in this video and use those facts to back up any opinions that I make. I also realize that a video like this is going to attract a certain audience that disagrees with my opinion and won't even give what I have to say a chance. They're not going to watch a second of this video before they go down to the comment section and comment something ridiculous. Now, for those of you that take the time to watch this entire video and hear me out with what I have to say, first of all, thank you. And second of all, let's go ahead and laugh at the other comments down below that clearly didn't watch this video or listen to anything I had to say. The stock I'm talking about today is Marathon Digital, or Marastock. This actually isn't the first time that I have griped about this company on my YouTube channel, complained about the management team and the way they're running the show over there, and quite honestly, I think this is some of the worst stewardship of shareholder capital in the entire NASDAQ. That's how bad I think this is. And I think that this is a death spiral not only for the company, but also its shareholders and investors, which is why I care so much about this. Now, I want to take you back to the first video that I made on this stock. I posted this video on November 15th of 2021, and just like I'm going to get in this video, we had some very silly comments, but I want to highlight just one of them. If we scroll down here, we can see this comment that has 6 upvotes saying, "And you're making this video and trying to warn people when the stock is down over 30%? And then somebody replied to that and said, "Exactly. If you truly would have had these concerns, you would have sounded the alarm a long time ago instead of selectively picking a day that it dumped." So much misinformation here, it's sad. I took this opportunity to buy many more shares at a heavy discount. Now, ever since I published this video, again, on November 15th of 2021, Marathon stock is down an additional more than 83%. So, first of all, I feel bad for whoever decided to buy a ton more shares at a major discount because it went down another 83%, but I'm covering this comment because I know I'm going to get the same sort of feedback. Rex, you're making this video after the stock is already down, what, over 90% from its all-time highs? Almost 90% from its all-time highs. I understand this, but that is not the point I'm trying to make in this video. I'm trying to make the point that I feel that Marathon Digital going back up to $83 per share, or whatever its 52-week high was, is extremely unlikely based on the way this management team is running the company currently. And it all starts with the company's business model. If you guys are unaware of what Marathon Digital does, basically they're in the business of mining Bitcoin, which is a very normal business practice in today's day and age. But the issue is how they treat the Bitcoin they mine, because although they realize revenue from mining their Bitcoin, they don't actually have any cash inflow because they 100% hodl onto their Bitcoin, meaning that any Bitcoin they mine, they are holding onto in hopes and in speculation that the price of Bitcoin is going to go up exponentially over the long term, which it very well could. But there is a major flaw with that logic. Without any other cash coming into the business, Marathon Digital is having to come up with cash to pay for their expenses from other places. And the only other 2 places to get that cash are either debt or equity, selling more shares of stock to the public markets. You can think of Marathon's strategy here as if a natural gas or an oil drilling company drilled oil or natural gas, but held on to all of that natural gas or oil that they drilled in hopes and in speculation that the price of oil and natural gas would go up over time. Obviously, if a natural gas or an oil drilling company had that strategy where they didn't sell any of the oil or the natural gas that they drilled, they wouldn't make it as a company because they don't have the cash inflows coming in to reinvest or to pay off their expenses. And in turn, they would have to go to the debt markets, or if they're a publicly traded company, sell more shares of stock. There's a reason that that business model has never worked in history. Think about it. Even despite oil prices right now being at record highs, We've had oil drilling companies go bankrupt just last year. And these are companies that willingly sell off their production of oil and bring in that cash to pay expenses, to pay dividends, to pay for reinvestment. Those companies went bankrupt. So if those same companies would have exercised a 100% HODL strategy on their oil and waited until today at record highs to sell their oil, there is a 100% chance that those companies would have gone bankrupt. Every single oil or natural gas drilling company that holds onto their supply or would hold onto their supply, 100% of the supply, would have gone bankrupt on the journey to where oil prices sit today. And this is the same downside with a 100% HODL strategy that I was talking about in November with Marathon Digital stock. I saw that this would not work. No business model in history has worked like Marathon Digital is trying to get it to work. Now, I will say, holding on to and speculating with a small percentage of production is a very viable strategy. Oil and natural gas companies do this. My family farm does this. We hold on to some crop for speculation, hoping that prices will go higher in the future so we can sell at a higher price. But when you risk 100% of your production on speculation about the future, that comes at a cost to shareholders. Whether it's a downturn in the stock market or a downturn in whatever hard asset a company backs or works with or produces, if those companies have a 100% HODL strategy, they're going to run into this very problem that I'm laying out today in this video. To really lay out this death spiral that I think Marathon Digital is in the midst of, not only as a company but for shareholders, I'm going to take a quick excerpt from their recent earnings call transcript where they said they're looking at around $500 million more of investment needs for the remainder of this current year. That is $500 million in cash that they're going to need to come from somewhere because, again, they don't sell what they produce. So either that cash is going to have to come from debt or it's going to have to come from selling more shares to the open markets. So let's do some quick math here. $500 million is needed by this company for the rest of 2022. If we go to Marathon Digital's stock price chart and do some quick math here, I'm going to lay this out for you. Let's say that Marathon Digital chooses to go to the equity markets to raise this $500 million in cash. And they decide to do this when the stock is at a 52-week high at $83.45. Well, quickly, let's find out how many shares they would need to issue and sell to the open markets to cover this $500 million cash need. If Marathon stock was still at all-time highs, they would need to dilute an additional about 6 million shares to the open markets to raise the necessary capital for the rest of the year. However, with the current stock price that Marathon Digital has at $9.27, that number of additional shares needed to raise that capital goes up to 54 million shares that would be needed to cover this cash they need for the rest of the year. 54 million shares they're going to need to dilute or sell to the open markets, diluting shareholders and putting negative pressure on the stock price. This is the death spiral that I'm talking about. To raise capital, they need to sell additional shares to the open market, which puts negative pressure on the stock price, which sends the stock price lower, especially when the stock market is in a rough time. And then that forces them to have to raise even more shares to cover their cash needs because the stock price has gone down, so they need to dilute shareholders even more to raise the necessary cash. And it's just a never-ending spiral of downwards pressure on the stock price. So I can already hear the comments coming, saying, oh, there's no way they're going to dilute shareholders at $9.27. Well, guess what? I mean, that's just flat out incorrect because even despite Marathon Digital's share price being down more than 50% last quarter, the management team still diluted shareholders by over $100 million. They sold over $100 million worth of stock to the open markets to cover their cash needs, despite their stock price already being down more than 50% from all-time highs. The only other alternative for the company to raise cash if they're unwilling to sell their Bitcoin is to go to the debt markets, which also is a problem and also is dilutive to shareholders. Just to cover it briefly though, almost 119,000 shares were issued for stock-based compensation. Another almost 3 million shares were diluted and issued last quarter via their at-the-market offering, an ATM offering where they literally go to the open markets and hit sell with new shares of company stock. Again, putting negative pressure on the stock price. Another 200,000 shares were issued for long-term service contracts. A whole lot of dilution because they're unwilling to sell their Bitcoin. This is hurting investors big time. Now, let's get focused on the debt portion of this company because there's two sides to the cap structure of a company: equity and debt. Obviously, equity, they've proven they're willing to sell even more shares while the management team continues to get rich with their salaries. They honestly don't get hurt when the share price of Marathon goes down because they take salary in cash and their options they are selling right back to the company for cash, which again is really bad omen from a management team. If you're unwilling to hold shares of your company that you are leading, that is very bad omen. Now, I know that some of you Marathon Digital investors are smart enough to realize that the company has a $100 million line of credit that could be used to cover some of this $500 million in cash needs for the rest of 2022. But the problem with that is, according to the management team over the last quarter, they already drew down $70 million on that line of credit, meaning they only have an additional $30 million available on that line of credit that they can draw from to pay for these cash needs. So that is still $470 million that they're going to have to come up with from somewhere, whether that's equity or issuance of more debt. So let's focus on the debt portion of this company. This is pretty simple to do because all I did was pulled up the balance sheet of Marathon Digital for the most recent quarter. We can see that they have a note payable for $730 million. That $730 million is debt for the company that they are going to have to repay at some point in time. And other than that line of credit that I just got done discussing, most of this company's debt is convertible debt, meaning that they can pay off this debt by giving the lender shares of the company, issuing more shares, diluting shareholders even more to pay for the debt. The other option with convertible notes is obviously paying it off in straight cash. But again, we covered this entire video that this company doesn't get cash from anywhere other than debt or equity. So if they choose to pay off this note with cash and they choose not to sell their Bitcoin, they're either going to have to take on even more debt, increasing the risk of the firm, or they're going to have to sell more shares, dilute shareholders even more to raise the cash to pay off this note. Either option is terrible for investors and terrible for shareholders. So I hope you can kind of see where I'm coming from in this video when I say that I don't think Marathon stock is ever going to hit a new all-time high, especially with the way the company's being run currently, because every single cash expense is coming out of shareholders' pockets. Whether that is the cash that they're paying the management team for their services, that's coming out of shareholders' pockets via dilution. Whether it's the convertible notes, paying off those notes, either they're converting some of that debt to shares and issuing shares and diluting shareholders, or they're paying it off with cash from other debt they issue via other convertible notes, or it's cash they've raised by selling shares to the open market. And again, the company has shown relentlessly that they're willing to continue to sell shares to the open market, putting more and more negative pressure on the stock price. And obviously, as the stock price keeps going lower and lower, that means they're going to have to issue even more and more shares of stock to cover each individual dollar of debt they owe, or each individual dollar of expense that they're going to have to come up with for the rest of 2022. The short-term outlook for Marathon Digital right now is terrible, and the long-term outlook is pretty terrible as well, although I will say it's repairable. If the management team changes the way they do things, eventually they're going to have to sell some of their Bitcoin if they want to save shareholders, then save the share price. But in the past, just a warning, the management team has shown little to no care for shareholders. That's just the way it is. So now if you're looking for other options, if you're a potential Marathon Digital investor right now that might not have this downside that I'm talking about today, one stock that I am very fond of for Bitcoin mining, if you don't follow my channel, is CleanSpark. they sell a portion of the Bitcoin they mine. They have not diluted shareholders since November of last year, and so long as their share price is depressed like it is now, they're not going to dilute shareholders. I love the way that CleanSpark's management team is attacking the capital markets. They have $400 million worth of assets and only some $30 to $40 to $50 million in debt. They have a lot of room to issue more debt if they need to do that, whereas Marathon Digital, with already $730 million in debt, they have very little room to issue more debt because that increases the risk of the firm tremendously, and lenders are simply going to be unwilling to lend to a company like that. And if they do, they're going to demand a very high interest rate, which again is going to dilute shareholders even more than traditional debt would. This is a death spiral for the company and investors. Now, I also should cover another company that has an ATM is Riot Blockchain. CleanSpark has an ATM. Lots of Bitcoin mining companies have ATMs at the market offerings where they can go anytime without notice and sell additional shares to the open markets. It's kind of a downside with investing into growth companies. But if you find a management team that is stuck to their word and believes in shareholders and is buying shares of stock themselves, aligning themselves with shareholder interests, you can avoid some of this headache. So if you want that upside of owning a Bitcoin mining stock, I would suggest looking into CleanSpark. Obviously not financial advice because I'm not a financial advisor. Now, if you guys are new here or returning and not yet subscribed, I would greatly appreciate hitting that subscribe button. With that, I'll be back with a brand new video later this week. Have a blessed rest of your day. Peace out.